or hedge trade, because the main trend on the euro yen is very short still, but intraday wise we got some nice long entries on that pair, and I want to explain why we had received emails, people asking me why are you hedging a position. It's very simple. I cannot explain it in 2 or 3 minutes in much detail, but I will try to explain the basics. When we take an entry like this one on this daily chart, you can see we have a clear lower high after a daily trend line break. We have a trend line break here. This is 0.1, 0.2, 0.3 on that 1 to 3 setup, a clear lower high, a 2 to 3 line break, and then we have a daily short setup, and in between here we had intraday and 4-hourly chart setups too. So we took the trade down here, I think with a stop of about 80 pips on the 4-hourly chart, but our rules, our policy says that if everything is pointing in our directions and we keep one lot open, we start to trail a position even on the higher time frame. So it could be that you enter this trade on the 5-minute, 1-hourly or 4-hourly chart, but because everything is just pointing your way on these higher time frame, you stay in the trade for a long time. So now that happened here, we had a lot of resistance. We had trend lines over our red line, which is the 36 EMA, and if you connect all these lines, or if you just connect the last touches here, what happens, you will see that the price is always bouncing close to the 36 EMA. And because we manage this pair now according to our swing trading or position trading rules on the daily chart, that means that we have to stay in that short unless the trend is changing. And because resistance is holding still, right now the price is trying to break resistance as it did here and before here and here, but it's not confirmed. That means because the daily chart is just still telling us that resistance is holding and we don't have a long setup over the 36 EMA, that means that we have to stay in with the last lot on this position or swing trade since May. It's just the rules. We manage this last position, this short position on the daily chart, and that means even if we see retracements like here with over 600 pips, or like here with over 300, almost 400 pips, as long as the 36 is holding and the daily trend line is not breaking, we just keep that last position open. Okay, of course we have targets on the weekly chart, and that would be support. And if we switch to the monthly and weekly chart and we don't see support on these time frames, that means that we don't have a real target and we can leave the last position open as long as possible. Of course, that does not mean that if we get a daily green candle after a big move, that we cannot try to trade longs on lower time frames against the main trend. And that's what I did during the night today or yesterday, and I will explain it right now. So the short, the swing short or position trade here is still in the remaining lot, but also I got a long setup on lower time frames against that main trend, and it was worth trading. So I took a long trade, split it into 3 parts, took out already the first and second lot, and now I have a remaining position. So even if it's shooting up now, I don't know, 200-300 pips, and it's giving us a nice setup to the upside, I would lose on the short, but I would still win on the long, so the whole trade is hedged up with about, from down here, with about 900 pips, and I already took out some nice profits, which I will explain now, on the lower time frame and on the long. So what I do is I make profits on the longs and on the shorts, and if the market decides to bounce on resistance today later on for some reason, I'll make something still with my long, because I already took out 2 lots, but then the short will start making profits again, even if the last lot gets stopped out or I close it manually. Okay, now switching to the 1 hourly chart on the MT4, you have to draw your lines again when you change time frames. You can see I have 1, 2, 3 touches. I have support. From down here I can change the angle now. The 36 EMA is my guide. I have bounces after the first 3 touches down here. On the 1 hourly chart I have a trend line break, 1, 2, 3 and more touches, 4. The price is moving up. I get a 1, 2, 3 setup, a higher low over the resistance trend line, and I have a 1, 2, 3 setup over resistance on the 1 hourly chart. Now this here is our main trend line from the daily chart, and that is a 1 hourly trend line, but from down here to up here it's still 70 pips. If I have an entry here with a target of 70 pips but a stop of about 10 or 12, that is 7 times the stop, it's worth trying. Even knowing that the price is squeezed between the 200 and 600, it's still a setup. So on the 4 hourly, as you can see, I have support 2, 1, 2, 3 touches, higher lows, bounces on the 200, the price is coming back on to support. Here's my trend line from the 1 hourly chart. You see support on the 4 hourly, 3 touches plus the support on the 4 hourly here, 3 touches on the 1 hourly chart, a 1, 2, 3 setup, and then if I don't like to trade and wait for 1 hourly candle close, what I can do is I switch to my 5-minute chart. That's what I did actually. And what I see here, if I squeeze the chart a little bit, I have, this is my 1 hourly 1, 2, 3, and also what I have is a bounce on the 200 EMA. So the price is moving up, we have setups here, then the price comes back, it's touching the 200, and remember our 200 EMA system rules, if the higher time frames are pointing in the same direction as the lower time frame, that's always worth to trade. So the price is coming back, we have over 40 pips distance, it's touching the 200 EMA, and immediately after that it's bouncing on the 200 EMA. So we don't have a 1, 2, 3 setup, but what we have is a 200 EMA bounce followed by a green candle which breaks the 5-minute chart trend line, which is also a 1 hourly 1, 2, 3 trend line, plus the support I have on the 1 hourly chart and the 4 hourly chart. And then after the touch on the 200, the price moves up with a green candle, a big green candle, breaking my trend line. Also I have horizontal support in this area, 96.50, 55, and a green candle. Now what I do, according to the 200 EMA bounce trade rules, after a green candle closes I go long. So here that was a different broker, and sometimes you will see some differences, a couple of pips depending on the broker you use. A stop under here is it's only 10 pips plus your spread, and your target, remember, was about 70 pips. That means you split the position into 3 parts. You take out your first lot with about 10 pips plus spread, then twice that, so up here after what was it, half an hour, 2 lots out. That means you have a win-win situation. And right now here, look at that, that is your daily trend line. The price bounced on that line, created lower points, moved back down, and now it's still trying to move higher afterwards. So on the 5-minute chart you could manage the trade easily. Here's your trend line under the 36, a lower high, trend line breaks, you could close your last lot with about 40 pips, or you say no, I'm in a win-win situation, I'll leave the lot open, switch to your 1 hourly chart, draw again your support line, and say as long as that line is holding, I keep my last lot. It could be that the price wants to break resistance today, you never know. In this case you make much more, otherwise you take out another 30-40 pips and you will be happy that you took that trade. I hope that video was helpful. Remember, price is at resistance, so we could expect a bounce and that the price will move lower in the end, but because we never know and we are in a win-win situation, we leave the last lot open, try to make more profits. Thank you very much. I hope I can update you soon with new trades. Take a look at the Euro US dollar as well. It's retracing too, and some other pairs are trying to move up.
Wow.